So I guess it should be live any second now. So we'll wait for that. All right, yeah. Awesome. So why don't we just start? You can just like introduce yourself, I guess, and share whatever you want to about yourself. And yeah.
Sounds good, Frank. Thanks for having me on here. It's a real pleasure to chat with you live on YouTube. So my name is William. I currently live in New Mexico here in the States and working full-time as a financial data analyst, and just have a master's degree in public administration, did my undergrad in poli-sci and sociology as well up in Utah. That's where I'm originally from, and got into investing when I was 18. When I got into the military, and kind of have been down that path ever since. Just trying to always learn more every single day.
Yeah. So I guess like the first thing I always like to ask about, or what interests me, is like what got you started investing, and like what has sort of fueled that passion.
Yeah, that's a great question. I think about that quite a lot. So I grew up in a fairly poor family. My parents they immigrated over from Asia. My dad from Hong Kong, my mom from Taiwan. And, I remember my dad declaring bankruptcy when I was about 6 years old or so, and getting our car repoed, at 2, 3 a.m. middle of the night because they're behind on car payments. And then waking up the next morning and we had no car. We had just one car at the time. I remember the late night arguments my parents had about money. And so just growing up, like, we didn't do a lot of vacations. We didn't do a lot of things that other kids would have done, no extracurriculars, just because we were tight on cash. And so that really shaped the way, I view, personal and household finances as well. And I really developed kind of a scarcity mindset because of that. A lot of things I wanted as a kid, like Pokemon cards, we couldn't really afford. We did buy some Pokemon cards and stuff way back when it was popular, but my friends definitely had bigger decks than I did. And so that really shaped my childhood. It shaped my teenage years. And so, my dad, he didn't really trust banks. He would bury money in the ground. So I remember, like, one afternoon just seeing him dig in the ground, and he had cash in just wrapped in plastic, and he dug it a few feet down. He had a few ways of marking it, just because he just distrusted the banking institutions. And so they didn't really have like good finances. They didn't, they had credit cards, but they maxed them out. They didn't really invest. They didn't have retirement accounts. And so, I didn't really have any exposure to like budgeting or investing or real estate at all until I joined the military when I was 18. And I remember sitting at in a PowerPoint presentation, and they talked about a TSP, which is a thrift savings plan that the military has, kind of a 401k equivalent for the federal government and the military. And they're like, if you put money into here, historically it's grown, at 8% a year, or 10%. I can't remember the exact numbers they gave. And that was when my mind really shifted, and I was like, wow, that's kind of cool that I can put money into this vehicle and it can grow over time. And so ever since I heard that presentation, I contributed like 30% of my paycheck at the time. I didn't really have any expenses. I was 18, in the military, everything was covered. And so I put like 30% of my paycheck into, that TSP account, and that just kind of kept that habit ever since I was 18.
Cool. So I guess, when did you start to get more into like individual stocks? I know you invest a lot in individual stocks or crypto or kind of other forms of investing there. Or did you just like see your money start to grow and wanted to become more educated, sort of?
Yeah, that's a That's a good question. Let me start from the beginning of my investing journey and kind of walk through the different
Yeah,
phases.
that'd be awesome.
Yeah, so in the TSP they have target date funds, and that's what I did mostly. It has some a lot of target date funds, a lot of government securities as well, because I didn't really know any better. I was just kind of putting money in there. And I read a book, Your Money, Your Life, and that one was heavily pushing treasury bonds from the government. And at the time it was written, it was like 3-4%, interest rates back when interest rates were reasonable. And so they pushed kind of that sense. They pushed that, and I think they were really one of the first ones to really push, like the idea of financial freedom, where your passive income exceeds your expenses, for like the modern day movements. But they were focusing on the bonds. I did bonds for a little bit. I did mutual funds, but then I realized that the expense ratios were really high with my bank. So I moved into index funds. And that was I was like 20 years old or so when I got into index funds, and I read, Ramit Sethi. I read a bunch of other, personal finance gurus, and they all pushed, index funds. And so that's kind of the route I went on for about 8 or so years. And that's because at the time I was in college, I had a really active lifestyle. I was busy, taking classes and trying to go on dates and stuff. So for me, like personal finance was sort of in the background. I just put money away each paycheck. I worked throughout college, throughout undergrad. I was always kind of working 2-3 jobs. And so I didn't want money. I don't have the time to focus a lot on like the everyday movements of money. And so for me, largely during the college years, during my working years, I just kind of put it aside and just let it kind of, run in the background. It got to a point where I wanted to have a little bit more control over the finances and the investment side. And so that's when I started dipping from index funds over to, the individual stocks. And I remember making that transition. It was really scary because each year, like with index funds, you don't need to worry about it. You know that it's going to rise and fall with the U.S. economy. I was in the total U.S. stock market for the bulk majority. And I remember like getting into dividends and thinking that it was a good, it allowed me to play it safe still, but also have more control over the revenue streams. And so I remember like selling, it was like 50K or something like that of index funds and converting it into individual stocks. And I remember being pretty terrified of that. That was right around the crash. That was like February, March timeframe of 2020. So I think that was an opportune moment to get into dividend stocks.
Nice. And yeah, so you're investing in dividend stocks. Are most of your stocks in general that you invest in more dividend focused, or do you just kind of invest in stuff that looks good? Or I guess, how do you choose what companies you're going to invest in, and how do you sort of evaluate that?
It's a good question. So when I first started doing individual stocks, I kept with blue chip dividend paying companies, and that's because we had a retirement or like a financial freedom timeline of 10-15 years, which we wanted access to that cash flow earlier rather than later. So we didn't go with the growth stocks. We like primarily focus on the dividend stocks. So at the very beginning, just blue chip, aristocrats, kings, and that's kind of what we started forming our portfolio around. So I think eventually we got into like some meme stocks, some growth stocks, back during the hype of 2021 and GameStop and everything else. But we've since exited those positions.
Okay, that's good to hear.
Yeah, they say buy low, sell high, so that's what we did for the growth stuff. Everything else is kind of buy high, sell low. So we lucked out in that respect.
Yeah. And are you still kind of contributing like monthly or weekly or whatever, or do you kind of invest more specifically like when you see an opportunity, or how does your timing of your investments work?
Yeah, it's hard to time the market, as we've kind of seen in the last, to be honest, 2 years, right? The market has been kind of volatile. So whenever I have extra cash, I just kind of throw it in. I have this impulse to buy stocks about every single day, so I try to pace it out a little bit. So whenever I have some, a couple $100 here and there, I just throw it in whenever I can. I don't try to time it too much. If there are dips, we do have cash sitting on the sidelines for those dips, but for the most part, whenever we have excess cash or any liquid cash, we kind of just put it into the market.
Yeah, that makes sense. And I don't know if you mentioned crypto, but I know you invest some in crypto. So what is your strategy there, I guess, or how do you choose like what you're going to invest in, or is it just kind of whenever you feel like it?
Yeah, crypto is a funny asset. It's definitely an interesting one. So I got, pretty into individual stocks and learning how to analyze companies and stuff. So I still have a lot of faith in the traditional finance system. It's kind of what our modern day world is built off of, and whatnot. But there are a lot of interactions I've had with banks and moving money across banks or from bank to bank, or across borders even, where I'm like, this is really frustrating process. Going from, because I have a family in Hong Kong, and trying to move money from here to there is a big pain. And so crypto really sets the stage for, I think, the next generation of the financial architecture we'll be using down the road. And so, got into that. So most of the portfolio is built around Ethereum. So I first heard about crypto back in like 2018, 2017, and it seemed just like nonsense to me. And I didn't really take a deep look at it until the summer of 2021. Even then, I didn't really pull the trigger. Is that right? Or is that fall of 2020? And then winter of 2021 is when we started buying in. And so most of the our crypto portfolios around, blue chip, crypto, no micro caps. So most of it's built around Ethereum, Bitcoin, Polkadot, Cardano, some of the, safer projects that will definitely be around in the next few years. And that's the bulk majority. That's about 95% of our portfolios, some of the more boring cryptos. And then the last 5% is a little more speculative. So I miss out on a lot of moonshots, like Shiba and Doge and some other ones. And so, and Gala and things like that. So I kind of made it a goal of mine to put $100 into whatever project my friends bring up to me that are, micro caps, that have the potential of 10, 50xing, but also have the chance of going to zero as well. So I have a small portion of the portfolio for crypto dedicated to those more speculative bets.
Yeah, that makes sense. So you invest in crypto, mostly individual stocks. And what is that, I guess, leading towards? I guess you kind of mentioned briefly, like being financially free. Is that sort of your end goal with all of this, you would say?
Yeah.
Or?
Yeah, I mean, our goal, and my camera's wigging out a little bit right now. The eventual goal is to, geo arbitrage in Southeast Asia, have US-based revenue streams, but live in a much cheaper cost of living country that has, similar amenities to what we would expect in the US in terms of education, healthcare, transportation, things like that. So yeah, the goal is to get about 80 to 100K in, positive cash flow per year from our various assets. Okay. And the timeline for that is about 5 to 7 years from this point.
Okay, that's cool. So do you have any real estate?
So right now we do rent out our house on Airbnb, and that kind of covers our mortgage. And that's the only real estate. I guess we have Fundrise as well, which is, an REIT, like crowdfunded real estate. That's a little bit different though. And then we are going to build a house later this year, maybe next year, depending on how financing goes. Up in Utah as well, because the market's rapidly appreciating up there.
Yeah. What has your experience been with Airbnb? Like, is there anything I guess you could share about that? Because that's
Yeah,
like
it's not for
interesting to me.
everyone. If you're single or you don't have kids, that's kind of the more opportune time to take advantage of house hacking. Do it while you're young. Because once you start having kids and stuff, or have more responsibilities, it becomes a little bit harder to house hack with strangers. But from our experience, we started doing Airbnb fall of 2018. So we bought our house April, and then pretty soon after, I wanted to kind of decrease our fixed costs as much as we could, and so did Airbnb. We have 3 rooms in our house, so we rented out 2 of them, and that basically covers our mortgage. Our mortgage is about $1,300 a month. So just between the 2 rooms, back then it covered most of it. Nowadays we just do 1 room, and that covers about 80% of our mortgage. And so definitely not for everyone. Not everyone likes strangers living in their house and bumping into people you don't know. But we mostly stay in our room, and so it's mostly okay. And we live really close to a major interstate, so we're really close to I-40. And so we get a lot of people that are traveling between, California, Oklahoma, Tennessee, Texas, just kind of going back and forth on that interstate. And they just need 1 or 2 nights to stay, just to sleep over and stuff. And so we actually have the max stay for 2 nights. So that way we don't have any people that are there more than multiple days. We don't open it to locals or anything like that. So just people driving through.
Yeah.
They'll come in at 10 p.m., leave at 6 a.m. So it's pretty nice and easy for us.
That's cool. Have you had any problems with people being weird or
Oh yeah, I mean there's this one couple, they were they're kind of sketched up to begin with, and they're playing loud music in the room, and I knocked on the door to ask them to move their car since they're blocking my car in the driveway. And the guy opens the door. He's basically naked. I smell weed in there, and I'm like, oh, this is not going to be a good ending. And sure enough, at the end when they check out, the bed sheets had body odor on it. The walls just smelled like smoke. And so it wasn't too pretty. But we got a deodorizer for that. We washed everything 4 times. Ended up being okay. And then we had someone else do a super deep cleanse of their body. They drink a bunch of stuff. It was a week-long workshop that was hosted by some Indian woman. And it was a juicing cleanse or some kind of therapeutic cleanse of the whole body. And and she had some weird smelling stuff in her room. And on the day of her checkout, we heard her trying to do laundry at 3 a.m. And the next day, the sheets were clean, but we got to the mattress cover that's supposed to be waterproof, and there were poop stains all over. Apparently, in the middle of the night, her body just everything just came out, and it just blew everywhere. It was not a pretty sight. We took the top sheet off. It was fine. Took the what's a layer underneath that looked fine too, but then under that was just all brown, and we're like, oh my gosh. So we had to throw it out, and we got a new one. The mattress itself was protected because it was waterproof, but it stunk really bad. It was pretty bad. So yeah, you ever saw them get horror stories? But I would say 99% of the people that stay with us are really good guests. They're really respectful of the place, and so it's been not a bad experience.
All right, that's good. That's good.
You just get everyone every so often that they do weird stuff.
Maybe a little concern there. So would you say your goals have sort of changed over time, or what has shaped your goals, or what has made your goals in regard to your finances change? If you've noticed anything, I guess.
Yeah, I would say large strokes and large brush strokes, the goals have stayed the same. It's always been to find financial independence early on, transition early on. I hate the word retire because it sounds like you're not going to do anything with your life, but I'll probably be actively doing stuff until I die. But the idea of like working at a job or having to work, like that's all stuff I want to get away from.
Yeah.
That's been in my mind since I was like, I would say early 20s. When I first got into investing, I was thinking, 40 might not be a bad time to really transition to doing other things and being in a good spot financially. I would say after working in a corporate environment and doing a 9 to 5 and having managers and deadlines and stuff and projects that are mundane, that timeline has pushed up to like 35 or so. I don't know how people work. I mean, like some people really like their jobs and careers, and I think that's great. But I think for me, I don't know how I could ever work, a 9 to 5 or a salaried or hourly job for 20, 30 years. And so I would say that the end goal has always been the same. The dollar amounts have shifted as we've kind of flushed out what lifestyle that we would want, and also the timeline has shifted in terms of when we want to hit those milestones.
Yeah, that's something that's interesting to think about, or something I try to think about is just like whether I want to like work in more of like a corporate environment, because like right now the company I'm working at on my co-op is like, I think there's like 500 employees total in the company, so it's not like a tiny company, but it's definitely not like, definitely doesn't have like huge bureaucracies, and I feel like there would just be like so many more little things that would get annoying with like a bigger company, and I don't know, I just feel like that would not be that fun. So I definitely don't or I sort of agree that like I don't know how people can work that long or just kind of go through that monotony sometimes. But
yeah, it depends on people's personalities, life goals,
yeah,
risk tolerance, and stuff. Like my brother, he's working at a hospital as a data analyst, and he is totally content with doing that for the next 40 years. He's not a big risk taker. He likes the stability. He likes the consistency, and that is perfect for him. He would not do anything risky, like individual stocks and anything entrepreneurial. He's totally content with where he's at, and I think that's fine. Like we need a bit of both, right? We need people that are more risky and entrepreneurial that want to create. We need people that are also a little bit more anchored down and want to hold down the fort over the decades.
Yeah, if no one wants to work like a 9 to 5 job like after the age of 40, it's probably not going to work out too well.
Right.
So yeah, that's cool. I would like to talk a little bit about your businesses because that's something that's pretty interesting to me. So I guess if you could just kind of give an overview of like the sort of businesses you're involved in and how you got into that.
Yeah, definitely. So we try to keep a diversified portfolio and take advantage of tax breaks and stuff. And most of the tax code, if you're a W-2 worker, you're not going to have access to the majority of the tax code. It's hard to take advantage of the tax breaks available. And so we were looking at real estate, which has a lot of tax efficiencies, and for that, the other one is business as well. So we're looking at real estate, look at business, and we thought we figured we start off with business just because the Albuquerque real estate market it's not great. The population growth here in New Mexico is like 2-3%, whereas places like Utah, Arizona, Texas, they're double digits, and so the housing markets there appreciate much faster than they would in Albuquerque, just because of the population growth. And so we kind of stayed away from real estate and did business instead. It's cheap to start a business up in New Mexico. Therefore, the cost of failure is a lot lower if there was, if we did fail. And so, we had gone on a trip to Singapore, and we ran into this concept of splatter paint. And I was interested enough that in the idea and the concept that I was like, we can definitely take this back to the States, try it out in New Mexico, see how it goes. The barriers of entry are really low. It's a really simple business model. You provide canvas, paint, protective wear. You have a large open space. It doesn't be super refined. It could just be whatever. The place we went to was, really DIY, kind of like just mom and pop feel, like not professionally done, and we're having fun. And so we thought we could replicate that business model and kind of improve upon it. And we figured if we could do it in New Mexico, we could do it anywhere. And that's kind of the galvanizing point or galvanizing cause for why we decided to start in New Mexico. And so we started up a business. It's called Chatterpaint, chatterpaint.com. It's the website, at Chatterpaint, for the Instagram. But basically we have, we've expanded now to, have splatter paint. We have paint wars, which is kind of like food fight, but we have, non-toxic water-based paint, both regular paint and blacklight paint as well. People love the black lights. And we're adding on spray paint as well. And so we're just kind of revolving our, new products and new services around unconventional art, but, that allows people to kind of explore their creative side in a DIY manner. And so overhead, the margins, the gross margins are pretty good on most of those products. They're like, 85, 90%. So that allows us a lot of room for, tolerance in what we are able to do. So that's Chatterpaint. Still in the stages of infancy. We opened June of 2020. So we're coming on our 2-year mark. And it's been kind of up. It's had its ups and downs during COVID. And so there's definitely been some challenges that we did not foresee or plan for. But also a lot of opportunities as well that we didn't really anticipate. So definitely been growth on both areas, from both areas. A lot of challenges, a lot of the opportunities were present with due to COVID, and would not have been there otherwise. I think it was definitely a unique time to start a business.
Cool. And then you had like another business, right? If you don't want to talk about it, that's fine too. But
yeah, so
like,
part of what's cool about starting a business, especially a physical retail business, is you get almost connected. You get plunged into a network of other business owners. And so our shopping plaza was just recently renovated. The entire thing, used to be one big building. The landlord had sectioned out into little retail spaces. And so all of the businesses there were starting off around the same time. So I had the chance to meet all the other business owners in that plaza. And that was really unique because they were able to kind of give us a lot of advice that was really crucial early on in terms of how to hire, how to do cash flow, how to do sales tax, just the basics that you wouldn't. It can catch you off guard if you're not, if you're doing it for the first time. One of the people there were owners of a paleta bar, and they're right behind us on the opposite side of the plaza. And they were first-time business owners too of that chain store. And so we met, we connected, we became really good friends. And they're like, "Hey, you should try out the paleta bar." And we tried it out. It's honestly really good. Like it's not like ice cream. It's not like the frozen yogurt. It's something different. It's a popsicle, but it's cream based. And so I tried it for the very first time, and I was like, I could probably eat this 3-4 times a week, every week, for years on end, and never get tired of it. So I knew they had a really good product, and we stayed in contact and stuff. And then a few months down the road, I think it was about a year later, they're like, "Hey, you guys should open up a paleta bar." And I was like, I don't know. We had our hands full with Chatterpaint, our full-time jobs and stuff. And so we weren't quite sure what our appetite was for another entrepreneurial endeavor. But then they showed us their numbers. And so, his name is Justin. he kind of was like, hey, just take a look at our numbers first, and if you don't like it, that's fine, but just at least take a look. So he showed me the P&Ls, the tax returns, everything, and how much they were earning, and I was like, okay, like this doesn't seem to half bad. And so we talked to so there's a phase in franchising. It's discovery, and it's where like you get you meet with a person, they kind of vet you and to see if you have enough liquidity, if you have the experience that they're looking for, the temperament, etc., to run one of their stores. And at this point, the concept is it's basically a franchise. Not officially, they're in the works of becoming a franchise, but it's basically a franchise. And so the person that was interviewing us, his name is Dipo, D-I-P-O, and he's an immigrant as well from Indonesia, and he came over to play professional soccer before ending up in the food industry. And then, so I mean, Pletabar, he stood up 30 plus or so, and so we are just kind of we're just kind of one out of a couple dozen to open up a Pletabar. But anyway, so he vetted us, and he was like, hey, look, guys. If you buy 3 licenses, I'll give you an entire state. And so we're like, shoot, well, yeah, you can't get rich off of one store. Usually wealth is made in developing an area. And so we thought it would be a really good opportunity to kind of take advantage of, even if we didn't have the financial wherewithal at that point in time. And so we signed on for 3 licenses, or 3 franchise licenses for the state of Utah. And then he gave us the entire state of Utah to develop and to run. And so so typically franchises, they have area developers where people will kind of come in and sell franchise licenses to sub-franchisees to operate stores. That's how there's so many like Burger Kings, Wendy's, DQs and stuff like that. They all go off of the franchise model. And so we're really lucky to secure Utah. I don't think he knew exactly how many people were in Utah or what the potential opportunities were there. He thought it was like Oklahoma or Nebraska, not this thriving, economically booming state. And so, we were able to secure all of Utah with just the purchase of 3 licenses. And so that's kind of in the works. That was April of 2021. And we had to develop those 3 stores within 5 years of signing that agreement. So the first one is coming up. We've begun construction on it. The open date is April 9th, I believe. For the grand opening. Cool. So that's kind of begun. But it's almost there. And so, that for that project, I've partnered with my siblings, so my 2 brothers, for that. And so we're just kind of doing that as a family business.
Okay. So for the license or like you have access to the whole state of Utah, so that means like no one else can open a franchise there, basically. Or if they wanted to, they'd have to like go through you, basically.
Exactly. So we would basically vet, those that wanted to open up a Pletabar in Utah would get half the franchise fee, we get the training fee, we get part of the royalties as well. And so royalties are 3 or 6% of gross. And stores, we're expecting each store to do about $1 million in gross per year. Okay. And so you can do the math. It's about $30K a year per store that we get. That's kind of like a dividend. So I like that. It's kind of like a dividend. Yeah.
That's cool. So what's your plan for your businesses once you move like out of the U.S.?
Yeah,
would you still be involved, or is that just something you'll figure out?
I think the end goal is to be able to exit. I think, some people are able to stick with their businesses long term. Like you look at some of the more successful, right, businesses. I think Facebook is one of them, Meta now. There's a lot of CEO founders that are, that really start the company and stick with it long term. And those are people that are really invested and very passionate about their project. For me personally, like I think Pleta bars are nice. I'm not like my whole life doesn't revolve around Pleta bars. Chatterpaint's a really nice concept. It's really fun and really easy. But my life doesn't revolve around splatter paint and doing art stuff. That's just not who I am. I'm more interested in building things, and so I'm interested in building something up, but not necessarily continuing with the project to the very end. And so our goal is to build up to be wildly successful and then to exit out.
Okay. And I mean that's I guess that'll just like boost your available capital, so it shouldn't be. I guess my point is like, even if you don't make any money with these businesses, like cash flow wise, you still have like some asset there that you can sell essentially. So
yeah, definitely. Yeah, I mean people buy non-profitable businesses all the time, right? Okay.
Yeah.
I think James asked a question. So right now, Chatterpaint's in New Mexico. We have our first location here. We're opening up a second location on the other side of town as well. Albuquerque, I believe, is the 32nd largest state in the U.S. The metro has like 1 million people. The city itself has 5.5 million or 5,500,000.
You're opening up a new location, like a second location in the same
Yep,
city?
Yep. So second
okay.
location's been found.
It's cool.
And so that one is, the lease has been signed. So that one should be done, I mean, maybe end of summer. It's kind of our projected timeline for that. And then Pleta Bar is up in Utah.
Okay. Awesome. So I guess with your investments overall, you sort of have these businesses, you have your stocks, and you have some crypto. What I guess what would you say your current income is going towards? Are you kind of like putting some money towards all of them, or are you like focusing on one or the other right now?
Yeah, it depends heavily on which phase the investments are at. Like when you begin a business, it's capital intensive, especially a physical retail space. You need to build the Pleta bar. We need about $160,000, $180,000 or so in both, the renovation costs, the equipment costs, the license fee, the working capital to have on hand. And so, during that initial phase of prepping for opening, most of the cash is going to go that way. When we started doing individual stocks back in March of 2020, we were also opening up our very first store as well. And so we were putting most of our capital towards the construction costs, the renovation costs, the equipment, inventory, and things like that. And making sure we had enough capital, especially when COVID hit, right? We had to have enough working capital to make sure that we had a long enough runway to be able to sustain the bumps that COVID had caused. It depends, at any given month, there's always going to be investments into crypto and stocks. That's just kind of given, and retirement accounts as well. That's just standard. And then it'll fluctuate in terms of dollar amounts, and then business will kind of, if business is doing well, we don't need to put as much money in. If it's, needs some cash infusion, then we, allocate more money towards that. And so it really depends on the business, I would say.
And are you sort of like generally taking your profits from the business and just either putting them back into that business or like one of your other businesses?
Yeah, great question. So Chatterpaint right now, it can be cash flow positive, but it's not. And that's kind of sort of on purpose because we hire out a lot of the management, and Pleta Bar hasn't started yet. So as of right now, we have not really been compensated directly from our business ventures. We have had a lot of tax breaks and whatnot from those business ventures. Like we're able to write off between 40 and 50K each year. So on hand, I mean, on paper, we have losses, but in reality, we're about even in terms of the money we put in and what we have kind of in the bank.
Okay, that makes sense. Yeah. How does that sort of work with taxes? Because like I would assume you have like a separate business, right? So how does that work in regards to your like personal taxes? Like, are you able to write off expenses on your personal taxes?
Yeah, so I love taxes. I love, thinking of ways to mitigate or reduce our taxable income. So an LLC is what's called flow-through entity. So when you do business, whether real estate or an actual business, any losses flow through to your personal taxes. And so on paper, even like especially in real estate, right? On paper, you take depreciation, you take expenses like your mortgage, interest, insurance, furnishings, any utilities, internet, anything like that. For a rental property flows through as an expense. So that reduces so you have revenues and then you have expenses. And so you want as many expenses as you can. And then you want to equal out or exceed your revenues. And then that difference, that loss, then flows through to your personal taxes and reduces your taxable income. So, with the business, we are able to write off a lot of things and take depreciation, especially on leasehold improvements that we made for the business. And so that reduced our taxable income by quite a bit.
Okay. Yeah, that kind of stuff is interesting because like I guess part of my intuition would think, well, like it's just within the business, so it doesn't really affect your personal taxes. But
yeah, I mean, it depends on the entity. Like if it's a C corp, then it's a self-contained entity, which means the losses don't flow through to the owners. You always take losses other ways that allow you to flow it through to the owners, but it's a little more roundabout. But any flow-through entity, the losses do flow through to the owners directly.
Okay, that's interesting. I did not know that.
Yeah, and you can put a lot of things as a business expense. You can have your vehicle, if it's used for business purposes, be a business expense. Cell phone, internet, clothing. Like this right here is a Pleasure Bar t-shirt. Because it has Pleasure Bar on it, it's a marketing expense. And so like the business paid for this shirt. I wear it everywhere I go. That's marketing. And so, as long as you have like a logo of your company on the shirt, it can be categorized as, a marketing expense, and therefore using pre-tax dollars instead of post-tax dollars to make those purchases. So ideally, you kind of want to structure your life to be, have as many of your expenses, personal expenses, be a business expense.
Okay, that makes sense.
Yeah.
All right. So, are there any other investments you have you want to share?
Yeah, there's quite a few. We have quite a few in our portfolio. I think there's like about one or two more that we haven't touched on really. One is a convertible note. So back like 6 years ago, my friend was doing a startup company, and I had like 90 grand laying around. I was like, I don't know what to do with this 90 grand. And so he was talking to me about his startup and what he wanted to do and his idea. And I really liked his entrepreneurial drive. I was still in grad school. I was kind of dumb. I didn't really know how to properly vet business ideas and models and things like that. It just sounded cool to me. And so, I did invest $35,000 into that startup, and that's in the form of a convertible note. So that has like a discount rate, interest, things like that, for when the company, grows larger. And then we invested another $10,000 a few years later as well. So we have about 45,000 into that total. It used to be a large percentage. It used to be half of the portfolio. Now is about a little bit less than 10%. So the weight of it has changed, but it's I don't know if I should count it or not, because there is like a 97% chance that it might not make it. And so that's one investment that's really risky, and I don't recommend people doing it until they have, $250,000, $300,000 worth of other investments that are safer, before diving into anything like angel investing or anything like convertible notes.
Oh, the one interesting thing you said there was that he's like your friend or something, and that's like, I feel like that can sort of make it more risky because then you are like swayed maybe by your friendship to like invest or whatever in their business. And um, I heard like PPCE, and he was like talking about some like risky investments he was doing, and he was talking about like investing in some like startups and stuff, and he had like friends that were basically like, um, I mean, it's not like he was coerced into investing, but he said he was more likely to invest in their business just because he knew them, and that wasn't really working out well for him, I guess. So
Yeah, I mean, to be honest, you want to invest in a business, not an idea.
yeah,
Ideas are risky. Because ideas are cheap, right? Concepts are cheap. Anyone can have an idea. Anyone can have a cool concept. It's really the execution that is the hard part, and not just execution, but the management of the entity as well. And so, he had a really cool idea, he had a really cool concept. The execution of it is a little bit less cool, and his management of it is a little bit less smooth. And so, he's definitely running a lot of speed bumps along the journey.
yeah, that's something like even with investing in stocks or like public companies. Uh, I know like when I started, I guess I didn't really worry about management, or I was like, management, it's just like a few people, like they can't really have that big of an effect. But like I feel like just a few people at the top can have like a very large effect, and that's, I don't know if people overlook it, but I guess I tend to think people overlook it because I definitely overlooked it initially. And
Yeah, so just kind of going back to that, so the Paletta Bar, and honestly, any franchise, any business, any chain store, the hardest part is finding good operators, is finding good staff, is finding good people. And, companies that put profit over people will always suffer in the long run. They'll always fail in the long run. Successful companies always put people over profit. They focus on building up talent. They focus on, correct management. They focus on hiring people that do things the right way. Otherwise, really the people, like, you have the best idea, the best business model, the best concept, the best, balance sheet, but if you have the wrong people in place, things really get messed up really fast. That's
yeah,
my experience.
that makes sense.
Yeah.
And especially like you can have individuals like doing great, but especially if a company gets larger, like there's only so much each individual can like do in terms of like actual work, I guess, in terms of like producing your product or offering a service. So you have to have those people to be able to like be reliable, I guess.
Definitely. Yeah. Totally 100% agree.
And then yeah, go ahead.
Other than that, I think that's about it. So we have our
Okay.
businesses, part of our entire thing for now. We're also thinking about some other stuff as well. But those business, convertible notes, retirement accounts, we have our 401ks, IRAs. Those are just mostly 401ks are all like index funds. We have our taxable accounts. We have cash on hand. We have our crypto portfolio, and then we have our Fundrise account, and that's the bulk of our overall portfolio.
Okay, that's cool. Do you I guess what is your, I don't really know much about Fundrise. I've definitely heard of it and like seen people talk about it, but what's like what attracts you to that versus just like investing in like a real estate index fund or just like individual real estate companies?
Yeah, in terms of like priorities, I would rank REITs on the top. Like, there's the income that comes through it through dividends is ordinary income and stuff, but REITs give you exposure to certain sectors like apartments, if you want apartments, office buildings, if you want that, hotels, anything like that. Like you pick a REIT, hospitals, like there's REITs for everything. Like I would go to REITs very first. You can buy shares, it's super liquid, super easy to kind of track. You don't get any of the tax benefits really of real estate, like depreciation or anything like that. But you get a piece of something that's appreciating, hopefully, and the dividends that kind of spill off from that. Fundrise is kind of like a REIT, but it's a little different. You still get dividends, you still get that appreciation, but you don't have like shares in a company that invests. Like you almost invest directly into these various projects. And so you get that capital appreciation directly and the dividends as well. You don't get any of the tax benefits, and your money is a little bit more illiquid as well. And so, it's kind of some pros, some cons. I would recommend REITs over a Fundrise account. But Fundrise is a fun way to get exposure almost directly to various, projects, real estate projects around the U.S. They have certain ones that target like the Midwest. They have certain ones that target, large urban areas like LA, New York, or up and coming areas that have rapid population growth. You can do, malls. You can do multi-unit apartment complexes. You can do just about anything. And so it's kind of a cool concept. But the fees are high. It's about 1% for the management fee. And it's kind of illiquid. You can't withdraw for about 5 or so years. And, you get a K1 at the very end of the year as well. So a little more hassle on personal taxes.
I heard that's like annoying or just hard to deal with, but I don't know. Yeah. The K1 form.
Yeah, I'd recommend either REITs or just doing real estate yourself if you have that.
All right. Yeah, real estate is definitely interesting. I'm not like, I guess what draws me or what makes me interested into like investing in real estate myself is just like the amount of people that do it and seem successful from it, I guess. And it just seems like a lot of people are able to make a pretty decent amount of money from it. But it just seems like you could obviously just like be a lot more passive and just like put it in the stock market or something. But even like doing something more like a business, like you're involved with, seems like a similar level of involvement, I guess. I mean, I think a business would probably be like a lot more work per se, but I don't know. It's just something I think about.
Yeah, honestly, it depends on what level of involvement you kind of want to be in.
Yeah. And like you said, like for you, maybe real estate wasn't the best option just because of like your location and stuff like that. So that's something you have to take into account.
So we were looking at real estate in 2018, and I had a friend in Phoenix look at real estate in 2018 as well. And he bought a couple properties there and started doing long-term rentals. He just did a cash out refinance a few months ago, and he had like $750,000 worth of capital appreciation that he took out from his various properties. Now he's investing in short-term rentals that are, properties are 1.4, 1.7 million across the US and stuff. And he's got various partners. He's doing multi-unit, like apartment buildings and stuff. And so for him, the Arizona market, that Phoenix market worked out really well for him because they had this crazy price housing appreciation the last 2 or so years. And so he was able to really, he put the money that he put in and the money he's able to cash out, 10, 20, 30x, that. So he's sitting pretty nice right now.
Yeah. One thing I did want to ask you about was like how much time you're putting into your businesses and I guess how that affects your overall like free time or life?
Yeah, I would say in terms of like active to passive, starting your own business is like super active.
Yeah, for sure.
And real estate can be as well. If you're a flipper, if you're a wholesaler, there's a lot of like aspects of real estate and investing that are considered very active. But I would say business, regardless of kind of what you do, minus stuff like I know certain things can be a little more passive, like selling stuff on Walmart or Amazon FBA or stuff like that can be a little bit more passive. But for the most part, if you're doing anything like if you're building up a brand, if you are soloing and making stuff, products for consumers to buy, or you're doing a physical retail, it's very hands-on. It's very hands-on, especially in the early phases. It's kind of like a baby. When you first have a baby, you got to feed it a whole lot. It's going to cry a whole lot. It's going to fuss a whole lot. Or a plant, got to water it. Give a lot of water and stuff. And so businesses, especially in the beginning, I would say require more time than what most people would imagine.
Yeah. Are you still like, I guess, like actively focusing on your businesses and like putting in just as much effort, or I guess are you sort of able to step back some as you sort of get people in there, other people that can take care of that, or are you still like really involved?
Yeah, I think when you start a business, you quickly realize that you can't do everything by yourself. Especially if you want to scale up, right? So if you want to solo it, that's totally fine. A lot of people solo a business, but if you want to scale up, which is what we want to do, you can't solo. And so you start looking for people that can augment your capabilities and can take over parts of your responsibilities. Like, Terra Paint's a physical retail store. I could be in there every single day mixing paint, but I can also pay someone to do it. And so why would I put my time and effort in to do that when it can be hired out? And so you kind of have to start learning, like, what tasks can I, outsource? Which ones should I keep in-house? And typically the ones that you aren't very good at, or you don't want to deal with the complexities, you outsource. And then certain things that you really, you're able to leverage and make a lot of revenue from that, you keep in-house. So for me and Chatter Paint, we're relocating up to Utah, and so we need to start handing things off for the daily management of Chatter Paint. So we have a team, we have some partners that we brought in about 5 months ago, and they're starting to do the day-to-day stuff. And so I'm handing off the reins to them, and I'm focusing on a little bit more larger picture, more strategic, plans for Chatter Paint from a more macro perspective now.
Okay. That's cool. Well, had a lot of interesting things to talk about. I definitely feel like I don't know as many people that are like business owners in the sense that you are. I mean, I guess I know plenty of people that own a business, but it's just like a entity for holding real estate or something like that. But
right. Yeah,
more of like a actual brick and mortar business is pretty interesting, and I guess I don't want to say not as common these days, but especially among like younger people, probably not as common.
I'm just impatient. I can't wait 20 years.
Yeah.
So.
Yeah, that makes sense. Well, is there anything else you want to discuss, or?
James did ask a question about what franchises were considered. And I can kind of
what franchises did you consider?
touch on that briefly. So, I mean, every business is in different phases of development, right? And the earlier you hop on the train, the cheaper it is, the barriers of entry are going to be a little bit lower. And so with the Paletta Bar, they opened up in 2017 and just had started to kind of branch out. So by the time 2020 rolled around, it was still early on. And we really saw the vision of where it could go in the future. And so we wanted to hop on that before, it gets tough and hard to get on that train. More established franchises, the capital requirements are a little bit higher. The vetting process is a little bit more thorough. The licensing fee or the franchise fee is a little bit higher. And so once you get established, you try to make the barriers of entry a little bit harder so you get more qualified people. But early on in the franchise's development, you want people that are willing to sacrifice a little bit more, hustle a little bit more, putting that sweat equity. So you try to lower the barriers to kind of attract those kind of people that don't have as much financial capital, but they have more time or have more drive. And so we try to hop on a little bit earlier on rather than try to go for a more established franchise. And in the franchise world, it's a huge world. You can literally there's tons of franchises out there for just about every single industry, not just food. Most people think of franchise, they think, oh, food industry or desserts or whatever, or gyms. But there's so many franchises out there, things that you wouldn't even expect. And so franchises are a pretty good way to go if you don't want to create the business model, create the business processes, start from scratch. You pay a little bit more, but you save a lot more in time and risk as well by hopping in on a franchise.
Interesting. Thank you. That is a good perspective there. Just wanted to thank you for coming on. And again, if anyone does want to check out Will's businesses, I put the links to the websites and the Instagrams and stuff like that in the description. So definitely check out what he's doing. I think it's, pretty awesome to be taking that risk and putting in, I guess, that kind of sweat equity into something like that. And I think it's probably going to work out pretty well for you, hopefully. But it sounds like it's already doing fairly decently. And obviously you have some safer stuff to back you up. So I'm sure you'll be fine. But thanks for coming on and just kind of enlightening us about sort of a different perspective on investing. And I should have another video coming out this Saturday, and should have another guest on next week for the live stream. So we'll see you guys later. Thank you.
Cool. Thanks, Frank. Thanks for having me on here.
Yeah.